Hey everybody, Chris Johnson with Money Morning. Everyone's asking for an update on Joby and Archer Aviation, and I'm doing it today. That's right, we're going to go through the stock price charts, we're going to go through the options and the open interest configuration, most importantly, the seasonal activity that is pulling both of these companies down 30 to 40%. Should you buy or bail? I got the target buy the dip prices for you. That should give you a hint. Stick with me. 5 or 10 minutes, you're going to learn something new, and you'll be a better investor for it. Let's jump into it. All right, let's jump into it. I'm going to spend about 10, 12 minutes or so going through Joby and Archer Aviation, what's been going on with the companies, and do you want to buy them right now? We're also going to take a good understanding on what seasonality does to a stock, because this is the number one enemy against both of these companies. I'll explain all that in about 10 minutes or so. So stick with it. Let's go. So what's going on? Are they still a buy? Both Joby and Archer Aviation. Seasonality. You hear that term thrown around quite a bit, and I think a lot of people think it's an excuse. I'm going to explain exactly why it's not. Lack of headlines has been, up until today, a big problem for the stock. Remember, both of these companies are in their discovery phase. They're early stage growth companies, so they thrive on those headlines. Those headlines are catalysts for the stock to move higher and lower. Whenever we see seasonality slow down and headlines slow down, it's a deadly combination. It gets you a 20, 30, even 40% correction, which is what we're facing right now with both of these companies. But you don't want to throw them away yet. Archer shares continue to see pressure of breaking below even more technical support, while Joby is seeing a stronger outlook right now. I think the bottom line here, and I'll explain it over the next 5 or 10 minutes, is that you want to wait less on Joby Aviation than you do Archer. I think you can give Archer a little more room to correct lower and grab a better price, but Joby, I think the time is going to start running out a little sooner. You should expect to see some additional volatility as we make our way through the next 4 weeks. And it all comes down to this. This is a seasonality, and it's not an excuse. It's not a general take it home and, tell the teacher that your dog ate your homework situation. No, seasonality affects all companies. And the S&P 500, the NASDAQ are trading at all-time highs right now, but it's not in the circumstances that you'd like to see, and that's because of seasonality. I'll show you the circumstances right on the next slide. 1% is what you average over the last 20 years. And the reason I look at 20 years is because that captures the modern day investing style. Buying the dip was not a thing that investors did 5 years ago, especially 10 years ago. When you look at the last 20, you get the volume trends, you get the retail trends, all of that into this. And when you do that, you see that September is the worst month. Go back to 1935 or 40s or so, and you can make this data say what you want. But the last 20 years tells us that September is a tough month across the board. And when you combine that with something like this, which is deteriorating breadth in the market. And what you're looking at is a 50-day moving average, or the number of companies, rather, in the NASDAQ 100 trading above their 50-day. A couple weeks ago, you were in the 80s. Now we're down at 44. So what this tells you is that the market's highs, the all-time highs that we've seen for the last couple of days, are being built on many fewer stocks. This is the same situation we saw in 2022 that led into a bear market. Am I telling you it's a bear market? No, but I'm telling you there's cause for concern because fewer stocks are doing the work. And when you look at the speculative side of that, companies like Joby Aviation, Archer Aviation are seeing the effect even more dramatically. Today was a great example of why. When you look at this headline, this is a plan that the company has set into motion long ago. We saw an acquisition from Blade about 4 weeks ago, the East Coast routes. Well, guess what? Joby's partnering up with Uber. They put the news out today that the two are coming together to bring those routes to life at some point in 2026 when they get the certifications done. On any given day, this would have resulted in the stock being up 10, maybe even 15%. But on today, in the middle of that late summer seasonality trade, you're seeing the stock actually trade lower after the news. And this chart isn't even live. This isn't real time. The stock is trading down as I speak to you. This is the reason. It's that volume and that lack of enthusiasm from speculators. It is what affects companies that are in our Speculative 7 report. And if you haven't gotten the report yet, hit the link down below. It's a group of 7 stocks, the Speculative 7. that we look forward to taking over the Magnificent Seven. You've got your eVTOL, you've got your quantum computing, and you've got AI nuclear companies in that group. All the future of where technology is going. These stocks have outperformed. We just did our update to our quarterly update. They outperformed the NASDAQ 100. NASDAQ 100 was up 8%. Our portfolio of the Speculative 7 was up 14.4%. And you had the Mag 7 that scratched out 10%. So more volatility? Yes. More opportunity? Absolutely. And Joby and Archer Aviation are among those type of companies. So what happens when you get this seasonality? You start to say, okay, do I give up? Do I just let this happen? Well, I looked at the history here of pullbacks, and this was with Joby, but it's a similar situation with Archer Aviation. And you can see the pullbacks have been large, 64% being the largest that you've got here. And this was post-IPO when we started trading the company public. You can see a bottoming of the stock, and that's when the fundamental idea of eVTOL was starting to take hold, and investors were accepting that, yep, this is going to be something that happens. And you can see the momentum now starting to swing to the upside. Nonetheless, as early as the beginning of 2025, we saw a 54% pullback in the stock. So right now, at a 38% pullback right here, we're still within that range of being normal. It's not normal. It turns your stomach sometimes, but you have to understand that with these speculative stocks, these discovery stocks, you're going to see these large swings, and they open up to opportunity. I always like to say that volatility equals opportunity, especially when you're looking at the speculative end of the curve. So this is the chart that I put out there August 7th, identifying that, hey, these are the areas where you're going to see some resistance on Joby Aviation. $17 and $18 need to hold, otherwise the stock craters lower. I also, in that same presentation, gave you the buy the dip prices of $15 and $13. Now, $15, if we look at the next chart, went by the wayside very quickly. We see a little bit of a hesitation there in the stock mid-August or so. But that correction, that 38% correction, has pulled us all the way down to that $13 level, which I was saying this is one of my buy the dip prices. And it hasn't changed. When I look at the stock right now in the open interest activity, let's pull that back up, sorry. There is a reason why I still look at the $13 level as that potential support. 15 and 13 are your peak open interest puts. This is in the September expiration, so in about 9 days or so, these are going to go away. We'll look at the October in a second. That resistance kicks in at 18 right now on the call side and really down at that 17. That's what you want to look for when you've got the call and the put open interest where there's a little bit of balance in between them. And normally you'll notice if you look at this, you've got a curve that kind of looks like a standard deviation curve. There's a reason. The options market operates in the probability world, and that's why you see a little bit of a bell curve that is right there around the actual price of the stock. But nonetheless, that $18 and $15 and then $13 remains strong in terms of resistance at 18 and then support at 13 and 15. What happens, though, when we look at that October? This is an effect. The options traders out there should know this. This is a cycle month for Joby Aviation and Archer, and you'll see that there's a lot more option activity out there because this series has been open for much longer. But now we start to see a little bit of a muddled picture as we roll into October, where the put open interest strikes that have the largest amount of put open interest are down around that $10. You've got $14 here, but notice the calls that are sneaking in there at 12. This starts to get me thinking that this stock is going to bounce between $10 and $13 over the next 4 weeks or so as that volatility continues into the month of October, which is normally where we see markets bottom out. So when I look at that, it puts me in a mood, or it puts me in the outlook, I should say, where I start to see that support at $13 that's probably going to dissipate a little bit. $10 turns into my back the truck up price. And if you watch my videos, you know this is the point where I add to my positions. I have long-term leaps on both Joby and Archer Aviation, and at $10 we hit psychological support from the $10 level. The 200-day moving average is still there, and notice that 50-day is still in a bullish trend. So there is where the outlook for Joby comes in terms of the actual prices that I look at. Watch for any news. And I still think that you're going to see a little bit of a, let's call it a cash grab. It's not. It is the company coming out and selling some of their shares so they can put more money into the business model. I expect to see them announce that they're going to be raising some cash the next time the stock moves higher. Support at $12, $13, and $10 is where I'm a buyer of the stock, and I really start to get engaged in the stock more heavily at $10. And I am going to be buying those 2027 calls at that $10 strike. The 50-day remains bullish, but stands as potential short-term pressure for the stock. What do I mean? Well, if we were to rally up to $15 today, I'd tell you that, hey, because of this consolidation right here that we saw in August and the 50-day moving average and that 20-day specifically as well, it's going to be a little bit of a leap for the stock to make it above. That's why I think you see a little more volatility that leads to lower prices over the next 4 weeks or so. Long term, the bullish case remains strong for Joby Aviation. 2025 and 2026 are going to be years where they get a lot of these certifications. Full certifications planned on coming in 2026, and that's when you're going to start to see this model turn into revenue for Joby Aviation, and I've got a stock price of $35 as the target. Let's move on to the more difficult of the two, which is Archer Aviation. So Archer, and I'm going to cover this in about 3 minutes for you because I said I wanted to keep it relatively short. What the hell is going on with Archer? Well, it is more of the same. We've gone through the seasonality. Seasonality effect has had a stronger effect on the speculative companies, including Archer. Lower volume and lack of headlines allow the company to just list lower. It's like a boat that's just starting to turn over and you're afraid that it's going to flip. I don't think we flip on Archer. I think we have support at $10 and $9 here, but it's pressing. As we see now, we're down below 40% of the July highs. Keep in mind, at 50%, you start to talk about 50% retracements and Fibonacci numbers and all of these things that the technicians like to say. I don't like the fact we're trading below 10, and we'll look at that chart in a second, but you still have an opportunity here from a long-term perspective, looking out on the horizon with Archer at 8, maybe even as far down as $6 or $7 here. The chart's coming in a second. Put open interest still strong for the support to hold at $9 through September. October price forecast sustained volatility as the stock looks for a stable bottom to trade from, and I am growing a little more concerned with the technicals. Here's that chart right now, and you can see the big pullback that we've seen here, similar to what we saw with Joby Aviation, but big difference is that 50-day moving average has rolled over and is now in a bearish pattern. My rule, first of all, when you look at the 50-day, that is the one trend line that tells you whether the trend is friendly for a stock. As long as it's trending higher, it means that the trend is your friend. If it's trending lower, it means you're fighting against momentum. So right now with that 50-day trending lower, it tells me that 2 out of 3 days are going to tend to be lower for Archer Aviation right now, as long as it's in that trend. To add insult to injury, it's also closed below that 200-day moving average, the blue line, that is still in a bullish trend. But the stock is going to find it a little bit harder to actually put in a tradable bottom. That's where that $8 comes in. Here's that volume that continues to drop off. If we push this much further, that $10 level, which is where the 50-day is going to, the 50-day is going to sink down, and we'll have what we call a death cross if it crosses below the 200-day moving average. That starts to forecast prices that are going to be harder to move higher over the next 3 to 6 months in some cases. I think Archer could break that because of the speculative nature of the stock, but nonetheless, one of those technical headwinds that I don't like to battle. Looking at the options activity, right now you're seeing that $9 and that $10 levels in September's expiration, holding for in terms of the peak open interest puts. I look at that $9 strike, which is the largest one out there, and say this is going to try to hold, definitely try to hold for the next 9 days or so until those options expire. At the same time, you've got some growing optimism at the $10 level as we're seeing that option activity start to pick up there. Here's your October expiration, though, and when I look at it, you've got a glass ceiling again of right at $13. That is going to be a haul for Archer Aviation. And remember, it's got to go up against the grain in terms of those negative technicals, but when you look down here at the 6, 7, and 8, you've got more puts coming in to the market. We're seeing those added to on a daily basis. So this starts to turn into more of a stronghold for the stock. Could it go lower? Absolutely. It could go lower than that $8 range. Here's the prices as I see it in terms of buying the dip. When we hit that $8 level, and I assume that we will here because of those technicals moving against the stock, that's where I start to think about adding to the position. Unlike Joby, we're not there yet. I think you've got more of a bottom to grind out, if you will, in terms of Archer Aviation. And once that $8 price level goes, I think you have to start looking at a $7 price, another 12, 13% lower than that $8. And you're talking about more than a 50% retracement. Fibonacci's, all of that come into play. And you also have that bottom that we saw in April. Just like Joby Aviation, Archer ran into some problems at the beginning of the year and had a huge correction. So this all part of what I would call a healthy and dramatic correction. It was needed, a little bit of a blow-off top after all of that good news with Archer Aviation. Technicals still suggest that long-term we should be looking at an opportunity to enter the stock, and I believe that price is both at $7 and $8. There's your bottom line on it. Having lost those hedge positions at $9.50, $8 is where you look for that support to come in. That moonshot I talked about in a video a couple times videos ago, that cost somebody more than $3 million, but they expired worthless. It's always good to look at those issues and ask yourself, what's going on? What does somebody know? And that's exactly what we did. We face a glass ceiling at $13 anytime between now and October. That's going to be a hard go, especially against those technicals. I still hold a long-term buy on the stock with a bullish case up to a $20 price target. Again, these stocks are more volatile, more speculative interest in them, and when that speculative interest slows down in the summer and you see lighter volume, they're going to be affected to a larger degree. A 10% pullback for NVIDIA equals a 30% pullback for a name like Archer or Soundhound or Joby or Rigetti or any of these other companies, but the long-term vision of these companies is what is going to outperform a company, again, like NVIDIA in terms of profit or returns on your portfolio. That's it for today. Tried to keep it a little short for you. Make sure you check me out at moneymorning.com, covering all these companies and much, much more. Make sure you like and subscribe and get that free report down below. Until next time, I'm Chris Johnson, wishing you the best trading success. Have a great day.